The first session will look at the economic outlook for Malaysia. Basically, we will explore what to look out for in 2019, what are the key structural challenges that we need to address in the Malaysian economy, what are the prospects for this year. And for this session, we are very delighted to have here with us three very prominent speakers, well-known economists in the country who need very little introduction because they are frequent commentators in the various media and in many other reports. You find their name being quoted all the time. We have firstly Mr. Shan Saeed, who is Chief Economist of the IQI Global in Malaysia. He comes from Pakistan, but has been involved in economic research and economic forecasting for a long time. I think I won't go into the CVs of the speakers because in your files you already have got all of their CVs. The next speaker we have is Mr. Manokaran Mottain, Chief Economist of the Alliance Bank in Malaysia, formerly with M-Bank and before that with Southern Bank. And then we also have Mr. Zahidi. Alias, Chief Economist of the Malaysian Rating Corporation, or MARC. And all three of them, if I say it, have been frequent commentators on economic issues in the Malaysian media. So we will start with Mr. Shan Saeed to give us a short presentation.
Thank you, Tansari Michael Yeoh. Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, Assalamu alaikum, and a very pleasant morning to everyone. First of all, I would like to thank Michael Yeoh for inviting me so that I can share my thoughts. This is the second time in less than 2 months I was invited at World Economic Chinese Forum where I was talking about energy. Members from the diplomatic corps, my friends from press and media, I'm honored with your presence. I'll be sharing in the next 15 to 20 minutes the outlook for Malaysia in 2019. But I want to go back and say what happened in 2018. What did IQI say? Where did we go right and where did we go wrong? So I'll be covering these topics in the next 15 minutes. I'll be talking about economic outlook in 2018-19, then oil movement, exchange rate, infrastructure, trade war, and global economic outlook for 2019. First, what did we say on 11th December 2017 when I gave my interview to Supriya at Edge Financial Daily? I think overall, we said oil prices will be trading between 60 and 87. On 2nd October, oil prices were touching $86, and then oil prices went down. 31st December, oil prices were trading at $55 per barrel. As of now, oil has gone up by 10% YTD. We said discount rate between 2.75 and 3.25. It remained there. We said GDP will be 4.9 and 5.4. Till third quarter, we are marginally close. We said ringgit 3.75 and 4.25. On 31st December, it was trading at 4.17. And inflation, we said between 2.5 and 3. It is under 2% in 2018. So now let's visit 2019. This is one of my interviews that I gave to Star newspaper just on the budget day. We are foreseeing the GDP will be trading between 4.5 and 5. Ringgit will be following oil and yuan, and ringgit will be following 3.95 and 4.45. Budget deficit is still very much under control. As you must have listened to Prime Minister Dr. Mahathir, the first statement that he made after taking over, he said, we want to manage the finances of this country. So government is very much focused. And we are seeing inflation to remain under 2.5%. And there is nothing to worry about budget deficit. As one of the global banks said, Malaysian budget deficit is going out of the roof and is something of a concern. But I think some people are losing their credibility. How to read the balance sheet of the government? I have been following financial markets. I have the privilege of seeing two global banks going down in front of my eyes. 18th March, Tuesday 2008, when Bear Stearns went down, I was in Chicago. I was studying there. 15th September, Monday 2008, Lehman Brothers went down. I was there in Chicago taking my electives. So I think the market and the global players, they are trying to gauge how to read the balance sheet of the government. Economy does not run on one single variable. There are so many variables, and later I will share Muhammad Al-Arian's slide where he talks about there are so many variables that you need to analyze. So these are some of the variables that at IQI we analyze before we make a forecast. So it is not about one single variable. Economies don't run on one single variable. So these are some of the variables that we look at very, very closely. We look at the region, ASEAN region, and we look at the global economy very, very closely. Energy market. This is one of my interviews in Dubai. In 2019, I was talking to Zahid, and we are more or less on the same page. Oil prices will be trading between $73 and $107 per barrel. And we stand by the statement. The premise is very simple. US dollar will stay weak. Geopolitical risk is getting into the landscape, and there will be supply constraints as we go along in 2019. I was talking about Petro Yuan in one of the local magazines called Smart Investor in November 2014. I said Petro Yuan is becoming the new global reality. And what happened on 1st September 2017, Petro Yuan became the reality when Chinese started their transaction with Russia in Petro Yuan. One of my interviews locally with Edge magazine where I said Petro Yuan will become, it has become a global reality, and it will be a huge challenge to petro dollar. Ringgit. A lot of people have been, sharing Cinderella stories. I have been tracking since 2015. And at this point of time, I would like to mention when post-Donald Trump, November 8, 2016, Ringgit took the beating, 6.4% in less than 22 days. And I would like to mention the name of this woman I really respect, Tengku Noor from Banama. And she called me on 30th November 2016, and she said, Shan, the global banks and a lot of people are saying that Ringgit will touch 4.8 and 5.8, and Ringgit is going to crash. So on 1st December 2016, we said at IQI, we foresee Ringgit touching between 4.10 and 4.3. It did not touch 4.8. 31st December, Ringgit was trading at 4.04. So a lot of global banks and, even the rating agencies, they have been wrong on Malaysia for the last... I have been in Malaysia for the last 7 years. I moved from Chicago to KL. And I have been monitoring their statements, and a lot of things. And they have been off track. So Tengku Noor gave me an opportunity. I'm grateful to her. These are some of the Ringgit rates. And if you see, if you do the average of Ringgit in the last 4 years, if you take just average of this, it is 4.16. So Ringgit will be following Chinese yuan, and Ringgit will be following oil movement. As you know, Chinese yuan might go down further, and oil might go up. So it's like a balancing act. But in the last 7 years, I think the central bank, they have played their cards very prudently. They have used monetary policy to spur growth. And overall, the economic confidence is pretty high in Malaysia. World Bank, IMF, Infrastructure, BRI, Malaysia. I was invited in 2017 to attend the World Bank and IMF annual meeting. I don't know anyone. One of my professors at school recommended my name. And I had listened to Sir Richard Branson, who extemporaneously talked very highly about BRI. And in my opinion, Belt and Road is the only winning infrastructure investment strategy that can spur growth. And China is not going down, full stop. Some people might think China will collapse tomorrow or day after. I think some people will continue to daydream. These were some of the countries that were featured during Infrastructure Investment Forum. Malaysia is there. Why Malaysia? Because Malaysia has got a strategic geography. 80% of China's trade moved from west to east to Strait of Malacca. 40% of the global oil supplies move through Strait of Hormuz, which is close to Iran, and Strait of Malacca. And the third strait that is getting a lot of importance is Bab al-Mandab, which is close to Djibouti. And when at IQI we were talking about Djibouti, that was January 2015. Wall Street covered on 26 November 2015 about Djibouti. Djibouti is a very small country, 1 million people, 90% Muslim, 10% Christians. You have the Chinese, the US, the French, the Japanese naval forces all stationed over there. One of my professors, Robert Fogel, wrote a paper in 1964, and he talked about how infrastructure investment has direct correlation with GDP growth. And it still stands. He studied about Japanese Shinkansen and American railway system. One of my interviews, I'm into properties via IQI, one of the top brokerage house. I said KL properties will become like Hong Kong in the next 5 years. This is 2017, and KL properties will not crash. There is no bubble in KL. Bubble happens when land prices are crashing. Look at what is happening in Hong Kong, what is happening in London. Land prices are crashing. So there is no bubble. Financial Times covered this on 20th and 21st October last year, whereby they compared KL properties with Singapore properties. So if you're there, in your slides, you should be there. KL properties are still undervalued as compared to Singapore. Trade war and SPAC. Everybody is talking about trade war. But some of the countries are benefiting, especially in IT, in automobiles, and in garments. And Malaysia is one of those countries, along with Thailand and Vietnam, who are still benefiting from trade war. Some of the countries that are suffering are Singapore, South Korea, and Japan. I follow Economist magazine because my Nobel laureate professors, they used to follow Economist magazine. I don't follow anything from rating agencies or World Bank or IMF. I think my credibility is very important. Global economic outlook. Ladies and gentlemen, I can tell you this will be one of the most toughest year the world has seen. You have Brexit, you have oil movement, you have Europe, you have geopolitical risk, and later I will share what Muhammad said. So I think I have come up with an acronym called CUT, C-U-T. You will have chaos in advanced economies, you will have uncertainty, and you will have turmoil. People normally ask me, who do I follow? These two gentlemen have got heavy influence the way I think. I believe in free markets. One of my professors, I was talking about Chinese yuan on 7th January 2011. And they were like 150, 200 people sitting in New York. And nobody believed in my insight. The only person who believed was my Nobel laureate professor, Gary Becker. And what is happening in US right now, inflation and everything, was predicted by Milton Friedman almost 30 years back in his book. Whenever I travel, I read this book, and he, on chapter 8, he coined exactly what will happen to US. So if you get a chance, please buy this book. It's worth spending time. This is Muhammad Al-Aryan, person who went to Oxford and Cambridge, and his credibility is very high. If you just follow this page, 172, it talks about economies don't run on one single variable. You have the governments, you have the policies, you have the geopolitical risk, you have non-state actors. You have so many variables at play. So economies can't be played like a piano. You press fiscal notes, you press monetary notes, or you press structural notes, and you get standard solution. Economies are, I would say, it's a complex variables, and you have to amalgamate in a manner that it comes and it gives you economic and financial confidence. So I think I'm done. You have so many things you can read in your leisure time. Thank you.
Thank you very much, Shan. You did faster, better than we expected. That's good. May I now invite Manokaran to share your thoughts and perspectives with us.
First of all, thank you, Tan Sri and Kasi, for inviting me to share. This is the second time I'm sharing my views here. I have not changed much from the previous appearance. And also, it's a tough time. So it's a tough time, and we have to approach it in a very delicate manner. Actually, like what Mr. Saeed has already mentioned, that those are a few uncertainties globally. But we are here. I'm here to share with you what is the problem with our economy. Okay? So if you look at the global economy as a whole, there is the growth, the synchronized growth in 2017 has already come to an end. And now we are going into the risky momentum, okay, and very volatile environment. So recently, if you have read in the papers, IMF already revised the global growth lower to 2.5%, 3.5% compared to previously 3.7%. Also, this was after the World Bank has revised the growth lower. Okay, so largely, if you look at it, why is that happening here? Is because of the euro area as well as your emerging market. Okay, and these two. On the Malaysian side, okay, yes, we came into a new era, dawn of the new era, already 7 months, 8 months, but we have not seen the sunlight, okay, to tell you the exact words, okay. And when the new era appeared, we all thought that things will change and growth can, accelerate and all that. But what happened was, if you look at it, from 5.9% last year, end of last year, we have slowed down further and further to the recent one is the 4.4%. Okay, that was the period June to September. What about September to December? We are also looking at the indicators that we are receiving now. We are not too confident that things will change dramatically. We still think that the growth will be at that level, around 4 to 4.5%. And that wraps up our full year. Could be, although the government has mentioned that for this year, government estimate was around 4.8%, but in our opinion, we may be very conservative. We are looking at 4.6%. For next year, the government is looking at a stronger rebound, but we are looking at even for this year, 2019, we are looking at 4.5% versus 4.9% from the government. Okay, so we are analysts. We look at the statistics. We tell the so-called truth. Okay, maybe we will see what's going to happen. What are the main things? Okay, people are very happy that this year, after the SST, inflation is 0.2%. Do you believe that inflation is zero, near to zero, last few months? I'm sure you all are into New Year shopping now. You all will know, okay? But that's the number that is coming out from the Department of Statistics. We have to believe, lah. Okay, so full year, they are saying that this year's inflation is very low, 1%. And going forward, we are looking from the base, this is about 2% inflation for 2019. If it is true that all employers are going to follow this CPI or inflation rate, I think all of us, all the salaried workers, please, what to do. You don't expect too much from the employers for a hefty increment for 2019, which is almost due, anytime. Okay? But no employers will ask you, hey, as an economist, what's your real feel of it? No. They only look at convenient measure is the published rate. Okay? So, and given that the low inflation environment, okay, we think that we are not expecting any rate hike for this year. That's a good news. Okay? But we are more inclined to expect for a rate cut sometime maybe by the end of the year. Because, in our opinion, we can survive the first half of the year, okay, but we may not be, the growth can be even going down further, okay. Even if you look at 4.5% for this year, could be quite an optimistic outlook. But because going forward, we have already been highlighted what are the external risks and all that, and we concur the view expressed by the Mr. Saeed just now. Okay, what is the problem with their economy? Okay, first thing is wage growth. Wage growth, I have started working from 1986, okay, from the central bank. And until now, I have not seen pay a salary increment anything more than 3%. Okay, that's the from the financial sector. Financial sector is one of the most profitable sector. Okay, and you have not. I am from the broking environment somehow. Okay, I have not seen anything. Even bonus also, most of the time the boss got to say that, oh, we keep for the rainy days. I have not seen any rainy days that has come, Although there are ups and downs for stock market environment or stock industries, ups or down, both are making money, right? Down also people got to sell and you make commission, okay? But this is the environment that as long as the employers choose to remain in the low income environment, how to achieve a high income national status by 2020. That's why I'm saying that, okay, slow wage growth definitely will delay the 2020 target. Okay, our target has already been snowballed, or rolled over to 2023 now. Okay, hopefully we can reach 2023. To see whether if can achieve the high income national status. Okay, but at the moment, if you can see, what is a good thing is here the salary structure between the male and the female has already been almost like touching. Oh, sorry. Okay, already equal in 2016 itself. Oh. 2017 is almost equal also. So that's the good thing that Malaysia is experiencing. Although in terms of employment ratio, not much has been achieved for the ladies. I think if you look at the director status itself, people are still fighting for lady employment, okay, directorship. So slow wage growth is a thorn that is not helping too much for Malaysia. Also, if you look at this income, okay, sector-wise, improvement is seen in the manufacturing sector and the construction sector. And you can see that lately the services sector also picking up. Okay. And if you ask the employers, it's a chicken and egg story. They will say that productivity is not increasing, so I cannot pay enough. I mean, my wage growth is not matching. Okay, is still below par. Because productivity, if you look at the productivity, you can see that over last 6 years, you can see 2.4% was the average productivity growth. For Malaysia, we must be growing at 3%. Okay, so we are not doing that. Okay, so you can see the growth is already falling down since 2017. Okay. As long as this productivity is one of the reason is, productivity, why is it low, is because of the foreign labor. Okay. Next issue is we need more high-skilled labor. High-skilled, if you look at the US here, okay, and Malaysia, you can see the high-skilled labor is 25% compared to 50% for the US. Okay. So we need more initiatives. We have got some, from the government. People, I hope that they can look into more incentives to how to transform the Malaysian job structure from the low-skill jobs to high-skill or even technical or technological-oriented high-tech jobs. And this is always we are talking about it, but action or solution is not coming in. Okay, you know how much, based on our official statistic, is 2.3 million. Okay, officially. Official foreign labor in Malaysia, but in actual count could be around 4 million. Okay, so they are the one who is actually suppressing the salary structure. So we need the government to look at, to reduce the dependency of foreign labor. So hopefully something can be done, and moving forward we can see more Malaysian workers in the system, and whereby our overall salary structure can improve, and we can achieve the high income nation by 2023. But if you look at it, if you look at this, I just want to show about 50% of the Malaysian population, if you look at it, 16% is B40, another 37% is M40, and 20%, top 20 is about, income share is about 46%. These two categories, B40 and M40, is about 50, almost like 60%, 60 to 70% of the population. They are still stuck in the middle income growth, middle income. So this is one of the major problem that we are facing also. So when we are going, there are a lot of initiatives to upgrade these people, B40 to higher level and M40 to U20 is not really, so we need to have more programs for the B40 people, okay, in order to help achieve the national agenda of high income nation by 2023. Okay, thank you very much.
Thank you very much, Manokaran, for sharing your key structural challenges for the country. Interestingly, all your 4 challenges you highlighted are manpower related. So I think we need to do a lot of focus on manpower planning going forward. May I now invite our last speaker for this session, Noor Zahidi, to share your perspectives with us.
Thank you. I always have to adjust this, actually. It's nice if I have a bouquet of flowers here, I can actually hide. Thank you so much. Very good morning to you, ladies and gentlemen. Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, thank you to KSI for giving me this opportunity to share my thoughts, actually, on the global economy and Malaysian economy going forward. I think that's, one thing good about being the last speaker is that everything has been covered. And so I don't have much to say, actually. But I think what I'm going to do today is just get rid of all this economic mumbo-jumbos, if you know what I mean. Because it's very complicated. I don't even understand some of them, actually. And I know that laymen will find it very, very difficult to just see what is it that we are saying, actually. So I'm just trying to make this as simple as possible, at least, as much as I could. But essentially, okay, this is another mumbo-jumbo, but I'm just going to do it in a very layman way. Essentially, if we look at the economy this year, let's talk about issues that's at the heart of everyone. What is it? Is it our concern? Our concern is that our economy is actually going to actually moderate further, slow down. There's going to be a slowdown, but we don't know how bad it's going to be if there is going to be a slowdown. That's the key issue. And to be honest with you, I think if you look at it holistically, what is going to happen this year is probably going to be dictated more by the things which are out there, externally. External factors, we're talking about trade war, we're talking about the US economy, we're talking about the situation in Europe and that sort of thing, rather than something which is domestically driven. It's quite true that somebody actually asked me yesterday whether there's any domestic factors which are going to bring the economy down. Yes, there is. One thing which I think which is going to affect the growth is definitely the cutback in projects and everything, yes. But that's not the main factor. The main factor which is going to affect the Malaysian economy this year is actually trade. Let's put it in simple way, it's trade. WTO, if you look at the statistics from WTO, it's been going down since the second half of the year, of last year. So we know that it's going to affect us because export sector is still, even though net trade is only about 10% of the economy, and everyone is saying that we don't have to worry because domestic economy is large. Yes, but domestic economy is going to be affected by the external environment as well. That's the whole gist of it. Okay, so let's not argue with all these numbers, mumbo jumbles. Yes, it's going to be affected if the global economy is coming down, and that's how this chart actually comes into the picture, because I'm just trying to tell you, well, basically, at least the way I see it, the U.S. economy, again, which is going to dictate the global economy this year, besides China, of course. Yeah. The U.S. economy is doing beautifully now. I think if we look at the numbers and everything, jobless rate, unemployment rate is beautiful. It's the best since late 1960s, if you can remember late 1960s. But the thing is this. In the financial market, we look at all this, the way investors feel, and we try to actually quantify how investors feel. This is the way we do it in financial market, and I think those of you who have seen this definitely probably have the idea of what I'm going to say. It's basically, financial market is saying that, look, the bond yields, and this is the technical thing, are saying that things actually coming off there at the bottom there. When you have bond yields, the spread of bond yields coming down there, and when you look at the history in the past 3 decades, 4 decades or so, it shows that, it signals that the U.S. economy is probably going to be in a much weaker state in the next 1 year or so, possibly a recession. And this is actually a classic sign of recession that we always look at. And if you were to ask me, are you afraid of this? Yeah, I have these butterflies in my tummy actually, looking at this, because I've seen this during the GFC, before the GFC, global financial crisis. I've seen this during the Asian financial crisis. I've seen this during the Iraq war last time. I've seen this during the commodity bust in the middle of 1980s. I'm that old, actually. So I've seen this, and I have this butterflies in my tummy looking at this. But let's see how the market reacts. So this is what we pay attention to when we look at the prospects going forward. Okay, for the Malaysian economy, a very quick one. I've actually wrapped up just now the way I feel about it. Externally, these are the things which are going to affect. But another one which I haven't touched just now is the Chinese economy. You look at the Chinese economy, look at the news and everything, that growth actually coming down. And the last year's number was actually, the slowest since 1990, yeah. So things actually coming off, not just because of trade war. The Chinese economy is actually slowing down even without the trade war. Because the measures that they have actually imposed before this to deleverage economies, that would have an impact going forward in the next few years. And we have to be ready for that. Now, the thing is this, on the Chinese economy, the renminbi, not just what is happening now would have an impact on the Malaysian economy, but also what they are going to do in the future. Let's say if the government wants to devalue the renminbi, lower the value of renminbi, that would have an impact on ringgit. We have seen that in 2015. So we have to be concerned not just with what's happening, but what we have to guess. What is it that they're going to do? That's one thing that I just want to comment about the Chinese economy. But overall, if you want to get the feel of the way foreigners are actually thinking about Malaysian economy, just look at this. This is actually the net flow of money in and out of Malaysia in the bond market and the equity market. And if you can see the one which I actually circled there, that was the period when the money actually flew out from the equity market, from the bond market. And the reason. 2014 there was actually because of the oil crash. And 15, 16, the impact of that still there. 17, there was a slight recovery in terms of equity. 18, there were a lot of noises, election and everything. Money went out again, 31 billion ringgit. That was actually total equity and bond was net outflow was actually the biggest since 2008, if I'm not mistaken. The combination of both. So this is actually the one that we're looking at. This year, I think, is going to improve, and slightly, and that's the reason why I'm not very pessimistic about the ringgit. But we have to look at this quite closely. Yeah. Now the other one is the real issue. Well, some of the issues, at least the way we look at it, is actually the government revenue, something which everyone knows. Talk about. The fact is that when we do comparison with other countries, we are rated single A by S&P, Moody's and Fitch. And when we compare with single A countries, for instance, our revenue is there in terms of percentage of GDP, and other countries are there. And that's the reason why I think the government now is still looking at ways to generate revenue. And if you look at the way they are going to do it, of course, I don't have to elaborate. Either new taxes, or what you can do is probably widen the scope of SST. Because I think SST right now, there are things which have not been covered. I think if the government cannot increase taxes or introduce new taxes, then they're probably going to do this. Yeah. That's my guess. Now, the other issue is, of course, again, this is economic mumbo-jumbo. fiscal balance, the budget deficit, something which I think is because of the revenue problem just now that I mentioned to you, and also because of the expenditure, especially on OPEX, something which I think the government is trying to control now. But OPEX is a bit difficult because it involves three major components: emoluments, pension and gratuities, and of course the other one is actually debt services. So these are the things which I think the government is doing, trying very hard to contain, and I think they're doing a pretty good job in that. And the other one is, of course, the debt. The debt is something, again, if you look at the general government debt, actually the star here should be slightly lower here, actually. But still, it's actually at the top range when we compare with other single A-rated countries. And I guess the debt is, we are back to this equation, whether the direct debt or the contingent liability. Contingent liability is something which had gone up quite dramatically post-global financial crisis, whereas the government debt has been sustained in terms of growth. So I think that the focus by the government is actually to contain the contingent liability going forward so that we don't overdo it. So those are the issues, I think, in general. And that's about it. And I would welcome any questions after this. Thank you so much, ladies and gentlemen. Yeah.
Thank you very much, Zahidi, for taking us through some of the global issues that we need to address. We have a bit of time for questions, so I think this could be a good opportunity for us to have some interaction with our three very distinguished speakers here. Before I open the floor for your questions, I'd like to start by asking our panelists, what will be the two big issues that you think will keep you awake at night? Two key economic issues, one global, one national, that keep you awake at night.
I think number one globally is Brexit. Brexit is a classic case study how capital will leave a country when the government is not stable. The policy makers, they have zero economic strategy to turn around growth. And there are a lot of negative signals to the market. And markets, they don't like negative signals. Markets don't like dictation, So what Donald Trump is doing to the Fed chair, Jay Powell, is just like giving direct dictation to him. The markets don't like dictation. This is global. I think Brexit and U.S. economy and the political bickering in White House and Capitol Hill, these are two. And domestically, I think the key challenge right now is the labor productivity. That's the key structural issue. I go to media and often Astro Avani would ask me, Shan, affordable housing. And they're always looking at one side of the picture, that housing is not affordable to common man, which is true. Investors who understand, who fathom history and economics, they only take position in two asset classes, real estate and gold. And real estate in Malaysia is not cheap. It's expensive. So you look at the other side of the equation, how people can increase their income level. So how do you increase your income level? By increasing the productivity. And how do you increase productivity? By bringing their skill set as per the market forces. Look at Germany. In 2001, the Economist magazine ran an article, front page, Germany is the sick child of Europe. By 2011, 2012, Economist magazine, same, front page, Germany is driving Europe. And I have very high regards and respect for Angela Merkel because, as you know, she is not a politician. She's a PhD, she's a physicist by training, and how she turned around the economy by investing in her people. So if you invest in your people, bring this skill set at par with market forces, and I will plagiarize Tansari Michael Yeoh's idea. He talks about A's and E's and D's. Artificial intelligence. I have a friend from Chicago booth who works for Exiata. He said, Shan, we are looking for data analysts. We are looking for people who are expert in augmented intelligence, artificial intelligence. How do you make the interpretation of data? Everybody knows that I work with very limited data. I don't prefer a lot of data. And how you make interpretation, how you extrapolate that data so that your clients can make economic and financial sense out of that. Otherwise, you look at the data and, if you don't know how to read numbers, it's a huge challenge. So I think productivity and Brexit and US, that would be a challenge.
Thank you very much. Manokaran, would you like to comment?
Okay. For me, the external challenge is the oil prices. Really very volatile, and stability in oil prices will help the global growth. And also the other external challenge that I'm looking at is, I would say that calm this US president not to fight with anybody. I think that will help the global growth, or the world going into the next recession period. I think what I mean is the tension between China and US. Who wants to be the champion is they can discuss otherwise, not as a national leaders. Okay, that's one. That's on the external challenge. On the domestic challenge or challenges, I think first of all we need firm economic policies coming from the right people. Look at ECRL. Everybody is becoming the minister of ECRL. Even somebody who is not even in the cabinet can still talk about it. I think this is not the way going forward. Do you know that why India has never become the next superpower after China? It will take years for India because too much of democracy. You let people to do anything you like. Here the new government says that anybody can talk anything. Look at what happened to the recent Cameron Highlands by-election statements. Everybody is going, is this government is going back to the race and religion again, like the previous regime? I think that's not that we wanted when we voted, we voted the change. Okay? We don't want. So that's one thing. And the other thing is cost of living. Although the inflation numbers are showing low, as I said just now, I think cost of living is still high. People, still just to feed their, children and all that. These are the few things that we don't want to see that, So cost of living is really escalating, and please, we need some kind of a solid solution for that.
Thank you. No, Zahidi?
Thank you. Just like what I mentioned to you just now about the Chinese economy, not so much because I care. I'm concerned about the Chinese economy, but the impact on Malaysia is that whatever unexpected policies undertaken by the Chinese authorities, that would have an impact basically on its currency and also its on ringgit and on Malaysian business sentiment, Malaysian consumer sentiment. Because at the end of the day, the volatility of ringgit is something which businesses are very concerned about. When I speak to business owners especially, they just want some stability. in terms of the currency, in terms of doing planning and so on. And that's, I think that would help in terms of business conditions in Malaysia. Because if you look at generally the business sentiment, that one has not picked up tremendously. And the concern is that, that there is a need for stability. I'm not talking about the government or anything. I'm talking about stability in the financial market, which I think they are looking at very closely. And that's the reason why I think in terms of capital flows in and out is something which, I'll probably be extremely concerned about. Yeah, thank you.
Thank you. I'll open the floor perhaps for 2 short questions. Yes, please, Ansri.
My name is Saw Chupun. I want to make 3 comments, and there are 3 comments and questions. I want reaction from the panel. If you don't mind, I add 1 more, 3. The first one is a lot has been said about inflation. If the official inflation statistics are not accurate, we are actually suppressing wages. If you look through the years in terms of real terms growth of wages, it is extremely low. Why are we not doing something about it? Why are economists not speaking up about this inflation statistics? The second point I would like to make is, one of the panel members said trade is crucial to this country's economy. I agree. But if that is the case, it stands to reason that we must participate in as many FTAs as possible, which includes RCEP, CPTPP, and the EU FTA. I would like some reaction on this, particularly on CPTPP. By the way, I'm a supporter of CPTPP. The third one is on revenue. Indeed, in terms of percentage of GDP, we are one of the lowest in the world. But the more disturbing fact is, over the years, it has been declining. And it appears, if you don't do something, it will continue to decline to critical levels. Solutions were given on the slide, which refers to more taxes, widen SST, but there was no mention of GST. I would like some reaction on GST being a possible solution.
Thank you, Tan Sri. I know when you were president of FFM, you have been one of the strongest supporters and proponents of the TPP. Any comments from our panel?
I think my response to my response on the productivity and wage growth, and this is one of the good forum to raise that issue. I'm sure Tan Sri will bring it up to the relevant people. These are the issues raised in the, and there will be more discussion on this issue. I think this is a chicken and egg story. If you pay peanuts, you get monkeys. Right. Okay, you pay low, you don't expect the person to work harder. Okay, this is the problem. Okay, we did a study. Okay, in 1986, the salary was around banking side was about 1,000 ringgit. Okay, now and first guy goes into the working environment. He gets about 2,008. Okay, that's Alliance Bank is paying 2,800. This is one of the highest because the norm is 2,500. And if you can see the growth wise, it has grown a very small amount compared to the inflation itself. So that's something we need to do about it.
Thank you. Zahidi, would you comment on the TPP and RCEP?
Yeah, sure. There's too many questions actually. Thank you. First of all, let me just make a comment about the revenue as percentage of GDP. We look at it over the years. Yes, you're right in the sense that it's been actually declining. It used to be about 23% of GDP, 22% or so back in 1990s. In the year 2000, it was about 19%. Now, average about less than that. The good thing, one positive thing about it is that Malaysia, not just having a low, what do you call, a ratio of revenue to GDP, but we also have a low ratio of expenditure to GDP. So if you look at among all the single A countries, Malaysia also has one of the lowest total expenditure as a percentage of GDP. That's the reason why our budget deficit is still within that about 3%. If not, it has actually imploded to more than 3% of GDP. Okay, that's number one. Number two, a more difficult question of GST. I believe you mentioned about GST just now. Okay. Now, definitely that GST last time, if you look at the amount which was supposed to be collected, okay, that would actually help increase the revenue, the government's revenue. Okay, of course, things happen. And if you were to revert back to SST, and which the government did, by increasing the coverage of SST, let's say, I'm just using this as a hypothetical thing. If you increase the coverage more and more and more, doesn't that actually mirror the GST? Actually? Except for, of course, the credit written back on money and that sort of thing. You know. But I think that's one of the things that I think the government is looking at. What is it that, for instance, like last time I remember one of the, in stockbroking, I think Mano knows, one of the transactions, if you have, one of the GST was imposed to the, when you do a transaction, stock transaction. I'm not very familiar with that. GST was imposed, but it wasn't under SST. I think the government may wish to cover that sort of thing. You know. But increasing the coverage of SST itself, yes, it would help in that sense. But going forward in the next 10 years or so, I agree with you, sir. Definitely, if oil is not going to be the major commodity anymore in the world, it's just not being used anymore, and our revenue is still based on oil-related revenue, then we have to struggle from other sources, definitely. Yeah, definitely.
Thank you. There's someone who's been standing there for a while. Can it be a very brief question, and that could be the final question for this session? Okay,
so hi, my name is Anik. I'm from the Association of Malaysian Economics Undergraduates. My question is simple. So we saw the wage growth rates and all that, and the government has, of course, increased the minimum wage by 50 ringgit. I'm not sure if that's actually a lot. But would you support the idea of subsidizing minimum wage, that is, on a more time basis where government subsidize 50% of all the people who are being paid at minimum wage in the first year, and then after 3 years, move on from like 30% government subsidized and 70% paid by the private sector, and then eventually after, say, a time period of 8 years, the private sector will then fully pay the minimum wage that all the B40 people who are meant to earn that much. Do you understand the question? It's more of like, so imagine that minimum wage is at 1,050 and you have so and so amount of people who are earning at that amount, right? And of course, some companies will be reluctant to pay that amount. But if the government, say, subsidizes 50% of that wage and they paid 50% of those people who are earning at that amount, and then progressively change that amount within a period of, say, 10 years, by the 10th year, the private sector will be paying the full amount of that minimum wage.
Okay, thank you. Maybe Shan, you've been talking about labor issues. Quick response.
I believe in free markets. I don't believe in subsidies. Subsidies create distortion. Subsidies create inefficiencies. So it is just like, I am studying in O levels and I have failed my 4 subjects out of 11. So it means I have to clear those 4 subjects in order to go to A levels. So my teachers cannot say, okay, Shan, we give you grace marks and you move to A levels and you can do well. No. That for me, that is like subsidy, That is like grace period. You cannot have grace period. So I believe, in education, subsidies, I studied from US. I can quote you. I have done PhD in US education because ever since I finished my high school, I was so obsessed with, US education system. The benefits I have studied from the British system and I have studied from American system. American system makes you independent. It makes you confident. It makes you, a very forward-looking person. So there is no subsidy over there. I went to a private school, private business school. They hardly give scholarship. Not even to locals, but also to international students. It's very hard. Undergraduate level, they give scholarships to someone who is good at music, or he's an athlete, or he's good at basketball, or other stuff, But scholarships in US, yes, they give, but it's very rare. Most of the students, they come on merit. Just imagine, you have 270 seats at MBA school at University of Chicago, and every year, 10,000 people, they compete for 270 seats. So competition is it's not competitive, it's highly competitive. And they don't give subsidies, they don't encourage scholarship. They want people to come on their own, study. When you invest with your own money, then you realize that, okay, I am getting something. So I think, I'm not a big fan of subsidy. I believe in free markets, and I think if you are independent, it makes you much more smarter and you are confident. Thanks.
Thank you very much. We have to bring this session to a close because the speakers of our next session are already waiting in the holding room to come in. Please join with me to express our appreciation to our 3 very distinguished speakers.